Hey, well, good morning, everybody. It's a pleasure to have you guys join us. And we're starting the 7 o'clock hour for our monthly update, market update for free grain, cotton, and livestock. Starting off this morning, joining us from the road, we have Dr. Welsh. I know he's on his way to another program, so we're gonna turn it over to him and give him a chance to give us an update from the perspective of the side of the road on the way to San Angelo, is what I understand. So, Dr. Welsh, we're turning it over to you.
All right. Well, thanks a lot. I appreciate this accommodation, and good to be with you this morning. And certainly, if anyone views this recording and want a copy of this presentation, I'd be glad to send along some slides and kind of where I'm going to talk from here this morning. Kind of the biggest thing kind of shaking up the grain markets in the last week, or I guess 10 days now, was the update on the world agricultural supply and demand estimates that came out in January. If you go back and looking at particularly at the corn market, which drives so much of our grain market activity and price structure, we've been on a nice little uptrend, some significant price strength in that corn market going back to late August. And so we set our harvest low for the 25 crop back about a. And then we saw that price pattern, trending upwards there for the last several months. And we kind of came into that January report needing a little more clarity on how big last year's crop was. And then we'll start shaping some price expectations for the 2026 crop. But we certainly had some upward momentum kind of built into that market. And I think one of the factors that supported that at the end of the year was thinking that, USDA had 188 bushels per acre average yield in August. They trimmed that back to 186 and a half, somewhere along in there in September. And the thought was, that may be overstating it. This crop may not be quite as big as we thought it was going to be. And I think that was kind of the market sentiment leading into the WASDE report on January the 12th. And then when that report comes out, not only do they hold the yield about steady, in fact, increased it a half a bushel, they increased acres. And so the crop didn't get smaller, it got bigger. The grain stocks report came out that same day. We've got over 1 billion bushels of grain in the bins on December 1st that we didn't have a year ago. So it just kind of confirms that oversupply situation we're struggling with right now in the corn market, and had a significant price setback in response to that crop. If you look at the other information that was in that WASDE, particularly around world corn production, same kind of numbers: record crop in the U.S., record crop in foreign corn production. In fact, if you look at the top corn producing countries in the world, every single one of those regions or production areas is expected to have a bigger corn crop coming out of 2025 than the year before. And I'm talking about the U.S., China, Brazil, Argentina, Ukraine, and even going down to some more minor producers, Southeast Asia, Mexico. The only one that's got a little smaller production this year will be Europe. But otherwise, again, just a lot of corn out there in the world right now. So that set us back. Now, if we can get some price strength or a trend that typically we would see from January to June, if you look at a seasonal pattern in corn prices, much of that stems from the uncertainty around, well, how big is next year's crop going to be? Or supply or the demand estimates, of course, on the consumption categories. And so one influence of that, of course, is that soybean to corn price ratio. And if you look at what soybeans have done since last fall, actually the price of beans has improved somewhat relative to corn, particularly with China now coming back in the market. They're buying some soybeans again, not where they were pre-tariff disruption, but they're coming back. And so that's given us a little more momentum in soybeans, which would lead us to expect a switch back from corn acres to soybeans to not only some degree, but I would anticipate a significant degree in 2026. And so we went from 91 million acres in 2024 to 98 plus million acres in 2025. So if we dial that back now and switch some of those acres back to beans, that has the potential to give us some price support, I think, in the corn market early in 2026 as we late winter and into early spring. That relationship right now in kind of the numbers that I'm kicking around would switch perhaps back 5 million acres back away from corn and back to soybeans. So go from 98 million, let's go back to 93 million acres in 2026. If we can do that, that would have enough impact on the overall corn supply that should support prices some 20, 30, 40 cents higher in the corn market in 2026 than we saw in 2025. So that's the kind of fundamental factor we need on the supply side. The break-even kind of level, what kind of cut in acres might just kind of leave us where we're at, or even maybe a little bit softer in prices. If we just cut acres, say 3 million acres, let's go from 98 to 95. With the carryover we're seeing, those 2 billion bushels of ending stocks, billion bushels higher in that grain stocks report that we had, there's just so much supply built into the pipeline that if we just cut acres 3 million, the numbers that crunch out of that for me just leaves prices kind of about where we are right now, and just kind of this kind of sideways pattern, and perhaps lower then into the rest of the year. So I think planted acreage estimates here in February, March. Of course, USDA will survey farmers in March and come up with their prospective planting report at the end of March. I think absolutely critical to any price support, kind of an underlying upward tone that we might look for in the corn market, especially that conditions in South America look really, really good right now. Of course, Brazil's big export crop comes after they double crop behind their soybeans, which will be in February, March, kind of a central Texas kind of planting window. So the big crops yet to come, but right now soybean and corn production look really strong in Brazil. So again, if there's something more positive fundamentally, I think it could be that switch from corn back to beans in the corn belt in the U.S. So really watch that number. I think that's going to be a key to our price strength. On the demand side and those consumption categories, the good news, particularly in corn, well, and wheat too, has been export activity. Our export sales for the 25 to 26 marketing year have been very strong. Grain sorghum's coming back. China's coming back in the market. The problem, of course, is if there are other disruptions or impacts on the overall trade environment, the trade arena. And certainly, poking a stick at our European allies and European partners, that doesn't help. It seems that we're on a path of disrupting our trade relations with our closest partners and allies, from Canada to Mexico, now Europe. Of course, China has been a contentious area for a long time, but certainly a very important customer for U.S. agriculture. And that whole atmosphere of one at which doesn't facilitate, it doesn't highlight the positive trade relations between nations. I think that has a negative impact for our grain markets because we rely on those export markets so strongly. When it comes to soybeans, of course, China is the largest importer of U.S. soybeans. The European Union is second. When it comes to grain sorghum, China's number one. Europe's number two right now, followed by Mexico. A significant trading partner. And then what that does to the broader financial markets, this kind of disruption and uncertainty starts to cast, I think, a negative pall on, again, the broader economic environment of the U.S. as a reliable trading partner. And so that starts to affect the investment that especially foreign investors, would bring to the U.S. economy, such as the investing in the U.S. dollar, buying our bonds. That would certainly have stock market implications when you disrupt trade relations with a major partner like Europe. So it affects the stock market, pushes interest rates higher. If it have to have higher bond yields to finance the debt we have in the U.S., if we see some weakening in the U.S. dollar, that trade translates into again, some negative economic consequences more broadly for the economy. Just a tough situation right now. So if we can get those situations settled, some clarity, some certainty would be extremely important for our grain markets. So if we're looking for something positive, I think really watch that planted acres numbers and that relationship between corn and soybean prices. I think will drive that. And then if we can maintain with what we have seen are some positive movement, especially in the export space when it comes to our grain markets, and we need to resolve some of these disputes to get that done. So that's what I brought to share this morning. If there are any comments or questions right now, I'd be glad to take those. And I'm going to hang on the line as much as I can. I hope the call doesn't drop. But good to be with y'all this morning.
Dr. Wells, thank you so much for making it a priority to hop on the call and join us this morning. We do genuinely appreciate it. We want to wish you safe travels as you head out to your next program and your event. As extension specialists, you guys get spread far and wide. And from a county agent's perspective, we appreciate you guys still having a commitment to supporting producers at the local level, being part of county programming, delivering relatable, reliable, repeatable, and relevant information. So thank you again for joining us. If we get any questions or feedback, we'll be sure to send them your way. Safe travels. We're going to get started next with Dr. Robinson. Dr. Robinson is our professor and extension specialist for cotton marketing. And he lost the rock, paper, scissors game for who gets to go first this morning, but we'll let him come in second here so he can get on the road as well.
Does my slide set look properly displayed?
Looks wonderful. Yes, sir.
All right, thank you. All right, so let's talk about cotton if I can advance. There we go. So here's a half a dozen years, 6 or 7 years of cotton prices. If you go back to 2019 on the left-hand side of this chart, that's what I propose is to remind you of what normal looks like. Normally, we have cotton prices in the 60s, 70s, and 80s like they were back then. And normally within the year, there's a typical rally, maybe as much as a 10 or 15 cent rally from the high to the low. You can see kind of a little uptick there and dropping off. That's a normal seasonal pattern. It happened again, or it started to happen in 20. And then COVID came in and it fell earlier and more drastically. And then a bunch of strange things happened to the pattern of prices. We had the dip in COVID. We had the rally after they pumped all this money into the market and stimulated a lot of, or delayed really a lot of mill use into 21. Anyway, we had this huge rally in response to the economic stimulus, and then they stopped the stimulus and had what I call a hangover associated with inflation and higher interest rates to cure the inflation. Anyway, whole lot of volatility in prices, most of which was macroeconomic related, policy related, economic related, and not cotton related. We finally over here on the right have something that I labeled Chinese restocking. That was when and that was policy related too, but that was when China came into the market and tripled their imports so that they could fill their warehouses with a supply of newer cotton. That's what was going on the last time we had dollar cotton at the beginning of 2024. And since then, we've had this rather historically strange flat low pattern of prices that you see on the right-hand side of this chart. You might say this is back to normal levels, back to the 70s and 60s, but it's the lack of volatility in this pattern is, I think, unprecedented. So let's kind of talk about, well, what reasons might give us this pattern that we see on the right. And as it was for corn, as described by Dr. Welch, the supply and demand numbers published by USDA do have some bearing in explaining why we have prices, at least at the level that we have. The numbers on the right-hand side for 25-26 represent the latest release by USDA of supply and demand numbers characterizing what was planted and harvested in 25. They tinkered with the planting number a little bit, but they really changed the yield number. Anyway, we wound up with less production tightened up the balance sheet somewhat. And what I'll focus you on is the bottom line, the summary variable of what's left over, the ending stocks, the total supply minus the total demand is 4.2 million. And if you look, compare it to last year, year over year, we're very much within the same ballpark, much similar number year over year compared to last year. And the non-rocket science conclusion would be we expect a similar price range. We would expect somewhat flat, non-volatile prices given this supply and demand outcome. But I submit to you, I wouldn't expect prices as flat and non-volatile as they've been, even given this supply and demand outcome. Something else I think is influencing prices to be so flat, just in this flat 60s, mid 60s, upper 60s range. So one thing that might explain more flatness would be the speculative influence. So I'll there's a lot I could explain on this chart that I don't have time to, so I'll just direct you over to the right-hand side of this chart, the downward poking green bars. What that represents is a historically high level of selling by outright short speculators, that is hedge fund managers who are investing their clients' money, and in particular, they made a bet that the cotton market was going to go down for whatever reason. I can't really explain their extended motivations here, but they've apparently bet that the cotton market was going to fall. They sold the market with the intent of buying it back at a lower price. They're trying to make money in a downtrend. What's unusual is that they have been in this position for 2 years, and they have hit record lows. They've never sold as much as they have sold in this 2 year period. And having taken that position, the expectation, I believe, of the market and of anybody watching is that, okay, when are they going to buy back? They've sold the market, they're going to buy it back to take profits or cut losses. And just the fact that there's this huge position that's waiting to be ultimately bought back, I think has given us somewhat of a floor price. And that would explain to me perhaps why we have this flat floor, lack of volatility. It's their position has given us a floor, and it's up from here, which I suppose is good news. I'll try to highlight any good news about cotton during this presentation. So I think that would be somewhat good news. The market's been acting like it has a floor in the mid to upper 60s, and old crop and certainly new crop may go up from here. But let's hope that happens. Let's hope that happens soon during the price discovery period for crop insurance for the 26 crop. That would be useful. What else do I want to say? Dr. Welch mentioned the pattern of export sales for grains, for corn. Export sales for cotton have been also unusually weak. They're depicted in this chart by the blue ups and downs, and good export sales I would define as anything over 300,000 bales per week, and we haven't had very many of those. We had one last week, but there's only been like 3 or 4 other weeks in the last year where we've had strong export sales. Otherwise, they've been pretty poor, and in particular, they've been pretty poor given how cheap U.S. cotton is priced. You would think we'd be stimulating lots of sales. I think the explanation for why we're not stimulating lots of sales is that Brazil has large crops, and Brazil is selling first, and Australia is on the upper end of their production, and Australian and Brazilian cotton is selling first. So hopefully, with the competitors, when they sell out of supply, hopefully the market will turn to us, and we'll start posting very strong export sales in excess of 300,000 bales, one after another. Hopefully that'll happen in the first quarter the first quarter of 26. And if it does, the market will recognize it, and it'll probably be a bullish development. Dr. Welch mentioned trade with the grains. The trade and the tariff issues are not a direct influence on cotton. because the only person that has tariffs on us is China, and we haven't really sold much cotton to be affected, to be impacted by a tariff. But I think the tariffs are having an indirect effect in that they're slowing economic growth, which in this chart is depicted in percentage terms by the green line. So 2 or 3 or 4% economic growth in the positive direction is normal for the world. And during recessions, we have negative growth. Well, if you look at this chart and look on the right-hand side of it, there's a sideways dotted line. That's the projection of economic growth, at least by the International Monetary Fund. And what you would conclude is that they're projecting flat, slow, no growth kind of scenarios. And what's baked into this forecast of low growth is the indirect impact of tariffs around the world, slowing economies, which as it slows economic growth, the other thing this chart shows is that that's generally a drag on demand for cotton, which is reflected by the blue line. The blue line here shows average cotton consumption pounds per person per year. And the blue line tends to go up and down directly with the green line, which is to say, when economic growth is good, when it's booming, people change jobs, get better jobs, buy new houses, buy new home furnishings, buy new apparel. And when the economy is shaky or uncertain, they tend to cut back on, discretionary purchases of semi-durable textiles. So let's just hope that the tariff situation gets resolved and the economy starts to boom. That'd be the ticket for what the cotton market needs. Very quickly, about 26, I'm expecting 10 million acres planted based on the combination of relative prices and the influence of the current drought in the Southwest in Texas. That does tend to be associated with more being planted and abandoned. So we'll have to see. We've got other milestones coming. Cotton Grower is out with their number predicting a little over 9 million planted. So we'll see what the grower-based surveys give us, starting with the Cotton Councils in February, or it's released in February, and USDA's in March, and again in June. Meanwhile, it's dry. I don't have to tell anybody, and we're in a La Nina forecast, which is a forecast of dryness, but that dryness is forecasted, at least the La Nina influenced dryness is forecasted to conclude by the end of February. And then we're in a quote normal climate forecast, which would give us quote normal weather. What is normal weather? I'm not paid enough to give you the answer to that question. But we're kind of in a weather situation. Anything can happen. So the right-hand side column is my guesstimate of supply and demand numbers possible for 26. Again, I'm thinking 10 million planted with 25% abandonment. That would give us a crop under 14 million bales. And if demand is similar to what it's been recently, then that could give us a slight reduction in ending stocks. You look there, a slight reduction year over year, but it's within 500,000 bales of last year's ending stocks number. So again, I would project this as somewhat of a neutral outcome, and I would call this more of the same for prices because we have more of the same for ending stocks. So that's what I think is the most likely. There are other possibilities, bearish and bullish, depending on surprises that might happen. So we'll just have to see how it plays out. Lastly, given that more of the same outlook, I would think from a 0 to 1, 1 being the highest, 0 being the lowest, I think we're in that time of the year where prices are in their normal seasonal rally. I think we can have the market, the new crop market, climb over 70 cents, make a run at 75, maybe 76, 77. That would be my guesstimate of the possibilities given the supply and demand forecast. And then when the market figures out exactly how much was planted and how much is out there and what's the condition of that crop, that's usually when the seasonal weakness in June, July kicks in. So this is what I'm looking for to happen we'll have to see. And with that, I will stop sharing and hand it over to David.
Oh, great. Let's see here.
We'll let Dr. Anderson get his slides loaded. Dr. Robinson, thanks for the normal update. Again, what is normal? I like that. If you and I both could define that, I don't think either one of us. I think we could, ponder retirement, right? You probably sooner than I. We'll let Dr. Anderson get his slides loaded for us. Dr. Anderson is our extension specialist, professor of economics with a focus in livestock. So we're excited to hear from him. I'm curious to hear what you have to say about the value of cull cows as we move through spring 2026.
Yeah, we got a lot of interesting things happening in terms of the cull cow market. And I'll make sure to talk about that. I got several things I want to do. I just kind of called this the weights. While we focus a lot on the cow calf side in this, I think one of the things I want to take us into is a little bit of beef production, and particularly fed cattle weights and their contribution to beef production, because that's really weighing down, I think, when we get to the beef market side of this. And so we're continuing to see things squeezed in the middle. We certainly have a lot of stuff in the news just last few days. Again, more screwworms found in Tamaulipas, Mexico, that appear to be cases that are not animals that were brought in, but that are animals that were already living there, in calves, for instance. And so that's another big breaking news thing. And I hate to even say this, but we got some people yakking about a dairy herd buyout. And those of us who might be listening in that remember the 1980s, when we had a USDA-driven dairy herd buyout due to just disastrously low milk prices, trying to reduce the dairy herd, reduce production, and get out of that very low price bind. We also had industry-funded buyouts later in time. We got some industry folks talking about a buyout again. Again, in response to really low milk prices and the largest cow herd since the early 1990s on the dairy side. So we might talk about that a little bit as well. But let's talk about the weights. That'll be one thing. And I put 3 points on here, but then I added another one last night thinking about this. So there's really 4 bullets and 3, 4. Let's jump in. I want to talk about weights first. The long-term trend is for heavier weights of cattle. Cattle are bigger. We feed them to heavier weights. We increase beef production per cow. And if we look at steer dressed weights in 2025, which is the blue line, I would point out, a year ago, which was the dotted line, 2024, we got to 960 pounds, all-time record large dressed weights. Well, we added 20 or 25 pounds to that this year in the fall and got over 980 pounds for steers. Heifer weights look just the same. They hit 894 pounds, so we're almost at 900 pounds on the fed heifers. We're over 980 on the steers, and I mean that's just an astronomical number, really. Yet we feed these animals to heavier weights, and that's boosting beef production. So we talk about, in this cycle, beef production is declining, and it is. But weights are helping to mitigate that and offset it. So I think that weights thing is a pretty important thing in the overall cattle market. And what that's led to is beef production. I want to point out this dotted line. We've got 2 weeks of data now. Is the solid blue line for 2026 in terms of beef production. The dotted line is now 2025. But if you look in December, our beef production in December, really after Thanksgiving, we actually produced almost as much beef as we did over the 5-year average. If I had 2024 on there, we actually produced a touch more beef in 2025 than 24 in December alone. Now, that's not true for the course of the year, but, the production, the supply side of this matters. And so I think this relates to not only what we're seeing in the cutout side of beef, the beef market, but also fed cattle prices. So recognizing that beef production's been actually pretty big in recent weeks, I think is kind of important in the overall market. I mentioned the cutout, and I'm going to talk the choice 600 to 900 pound choice beef cutout value. We keep said to 600 to 900 pounds. We keep talking about 600 to 900 pounds. That's the data nomenclature we've used for many years. Yet now we have dressed weights at 980 pounds on average. So things are changing. But take a look at that slide in the cutout value really since November, end of October, early November, where we went from about $380 down to under 360 in the cutout. And remember, I said rising beef production. I think that's a big part of this, is just simply that we've got beef production that in this short-term period has actually grown. We still have the cutout values well above a year ago, but sliding a little lower based on those supplies. The choice select spread, remember the price difference between that choice beef and select grade beef has been in the news a little bit in the last few days. People have recognized that the choice select spread has declined, that premium for choice. In fact, I'm using weekly data here, but in the last couple of days, we've actually had a choice select spread that was about $2, a $2 premium for choice over select. Well, one of the things going on with weights is that those heavier weights are leading to a little more grading choice. We had a little more total beef production in December. We had more choice beef produced because of what percent was grading choice. We certainly have more grading prime. So less select and more choice, I think, is driving this choice select spread smaller. So I think you'll see some more of that talked about. And really, I think that's related more to relative supplies of choice and select, really pushing that spread down to really its lowest level since, really the spring of 2024. So again, changes in that market, but I think more short-term supply driven. I mentioned the cutout declining. The biggest reason for a lower cutout is really a decline in value in the primal rib. The dotted line here in my prices is 2025. If we look here at kind of beginning of December, we were about $640 per hundredweight for the primal rib. And so you think about all the things we get from the primal rib, whether it's, rib eyes, your prime rib, all those great holiday things we buy. It's really dropped from about $640 per hundredweight 1st of December. We're down to about $470 now, just in the span of about 6 weeks. So much of that decline in the cutout is driven by the rib value declining. If we look at the rest of the primal cuts, they remain above a year ago and don't see this decline. So it's really that one item that is so much driven by a lot of fall holiday demand driven stuff. And so we passed the holidays. We've seen some lower primal rib values. Again, more supplies of choice and prime, and we're past the holidays there. We get into the calf market, and what I want to highlight is look at y'all seen what we've seen in auctions over the last the last 2 weeks, first 2 weeks of the year, we continue to see prices climbing. 500 to 600 pound number one steers, Southern Plains. Even by the end of 2025, we had rebounded and recaptured all that lost ground that we lost in mid-October. That decline, that really pretty sharp correction. We lost about $80 in the feeder cattle contract on the futures market. Certainly lost a bunch in the fed cattle side. Cash markets did not decline as much, but it certainly in the calf side of things, we've rebounded and recaptured all of that lost value. I think that points to volatility and why we might be interested in various risk management ideas, price risk management ideas but we have been able to recapture that again. Tighter supplies of cattle, fewer calves for sale, good demand for beef, good demand for cattle from feedlots that pulled those prices higher. On the steer side, though, I mean, on the fed cattle side, Southern Plains, you'll notice that in the last 6 weeks or so of 2025, we have not recaptured all of that ground we lost in October. We got back about half of it. We've had prices over 230. We had been to 240. We dropped to 220. We're back over 230 really in this Southern Plains market. And so, but I think the main point is we haven't recaptured all of that ground. I want to highlight something, and I should have taken this and made a chart where I put both of these together or subtracted one from the other. I think if you've watched the cattle market a bunch over the last few years, one of the things that's developed is we've tended to have a premium or a higher price for steers in the northern plains, Nebraska and Iowa, versus southern plains. Higher prices in the north versus the south. We've really seen a change in that. We have now had sharply higher prices in the south versus the north. Let's take a look at this decline, and I'm showing the 5 market weighted average. We got down to about 210, 212 for that 5 market average, averaging south and north when the market really corrected in October. If I go back, you'll see Southern Plains, Texas prices got down to 220. Implies about an $8 premium for steers in the south versus the north, when we had about a $4 or $5 premium or more at times the other way around. I think this is the result of sharply lower supplies of fed cattle in the south, in the Southern Plains, largely due to the border closure with Mexico to feeder cattle. We have not had those animals to feed. It's resulted in quite a bit fewer cattle on feed in the Southern Plains. So we've got tighter supplies available to be sold to our packing plants relative to bigger supplies in the north. If you looked at the cattle on feed report 2 months ago, Nebraska surpassed Texas as the largest number of cattle on feed. So the biggest cattle feeding state is now Nebraska. We got a cattle on feed report that's going to come out on Friday, and I expect that to continue, and I think that gap will get even bigger. So again, relative supplies are changing these prices. I wanted to mention something about trade just briefly. Take a look. We've got the latest data through October. Our imports in the last couple of months, particularly, September, October, as we got that data, have actually been just a touch less than the year before. Overall, for the year, our imports are up. We got tight supplies and record high prices. We're a pretty good market for foreign beef. But what I want to point out is the big decline is this dark line, and that's imports from Brazil. Our decline, that change in imports over the last several months to lower imports from earlier year highs is really because of Brazil. Higher imports from Australia, the red line, higher imports from Mexico and Canada, the blue and green lines. The big decline is from Brazil. But now that we're in January, when we get that data, imports from Brazil tend to increase because of the tariff rate quota on beef from Brazil. But just highlight where these are and these kind of top 5 sources of beef. If we look at the export side, our exports continue to be below a year ago. And what I want to highlight is this yellow line here, which is China. Practically all of our net decline in beef exports is because of the collapse in the market to China. Between tariffs, retaliatory tariffs, a new tariff rate quota that China imposed a couple weeks ago, which has not kicked in yet. But, the rest of our markets, Canada and Mexico, about where they've been over the last several years. South Korea, which is the green line, about where it's been, maybe a little less than 21, 22, but not a sharp deviation over a large number of years. And so the big decline is there. So if we wanted to focus on trade, we might focus on Brazil on the import side and China on the export side. I mentioned a cattle on feed report. I expect that report to show January. We're going to have cattle on feed down. We may be down close to 3% versus a year ago. Sharply lower placements, marketings that were ahead of a year ago, kind of match with that slaughter data, and beef production data being greater in December than the year before. More marketings out of feedlots in December leaves us with tighter supplies of cattle on feed, which sets us up for less beef production going forward. The other big report we're going to have come out on the 30th of January is the cattle inventory report. What do I expect to see? I tend to, and I'm going to illustrate this with kind of the last 70 years of the number of beef cows in the U.S. 2025, we really bottomed out. I reduced that decline in beef cows that we've had in this cycle. I think the number of beef cows is going to be pretty close in 2026 to 2025. I expect it to be actually up a little bit, not because of heifer retention in a big way, but because we reduced the number of beef cows going to slaughter, and we've reduced that enough to probably expect our beef cows to be a little bit higher than the year before. But anything around, a little bit bigger, a little bit smaller, I don't think should be a surprise when that report comes out. But again, really, really bottoming out that cycle and preparing for growth as we start to add heifers. I think that's my last slide. I wanted to mention something about the cull cow market. Kara, since you mentioned it, we've continued to have cull cow prices higher than a year ago. I think that's going to continue this year. We continue to have demand for ground beef, demand for beef overall, fewer beef cows to go to market. One of the things about holding back, reducing our slaughter of beef cows, I think a lot of folks held on to any cow they thought that might have a calf this year. And so, we could get some more of those older cows come to market, after calving season when we see where those animals are. Can they last a longer or not? But I think the big change will be on the dairy side. I expect to see more dairy cow culling. We've got really disastrously low milk prices. And combined with high cattle prices, I think that will lead to some more dairy cow culling in coming weeks and months. But I don't expect it to be enough to really reduce our cull cow market much. Given overall numbers, I think it's hard to see really prices below a year ago. And I do expect calf prices to be higher in 26 and 25. So with that as my last slide, let's see if I can end this show. And if my screen will come back, I might be able to stop sharing. Maybe. I think I stopped sharing. And with that, I'll turn it over to our next speaker. Unless y'all got a question for me.
Dr. Anderson, thanks for the update. It's an interesting time to be in the cattle business. I think it's an interesting time to be in agriculture, period. And when they talk about a roller coaster, we sure enough have been on one, and I think we'll continue to be. So we appreciate you taking the time to join us, making the technology work. Thank you for sharing your insights, and we'll plan again to hear another update. I know we've got a Ag Eco group update, I think, with Pablo. Monday. Yep. Monday. Yeah, Monday. But anyways, let's move on to our final speaker joining us from industry, Miss Christy Short. Christy serves as a regional communications manager for the Cotton Board, has a pretty immense territory to cover. If I read this right, she's got East, Central, South, and Far West Texas, as well as New Mexico, Arizona, and California. And I can tell you, while we haven't had a chance to meet face to face, I've heard nothing but great things about Christy. And have always heard that she's the go-to when it comes to talking about producer relations in cotton. So we're excited to have you join us this morning. We hope you'll spend a little time sharing with us kind of where you guys are looking at the Q1 for 2026 and potentially kind of projecting there forward. So Christy, we'll turn it over to you.
Perfect. Thank you so much. Hopefully you can see my screen. Let me know if you cannot.
We sure can.
Perfect. So yes, I am the Southwest Regional Communications Manager for the Cotton Board. So I am excited to get to work with cotton growers and industry partners all across the Southwest. So I do cover our far west states, California, Arizona, New Mexico, and then a good chunk of Texas land-wise. And so some of the best growers in the state, if you ask me. But I'm excited to provide just a little bit of an update for you guys. I'll kind of just highlight on two different departments at Cotton Incorporated as I move through this. But it'll be exciting for us to get started. So just kind of as a reminder, the Cotton Research and Promotion Program, we are made up of a trio of organizations. The Cotton Board, which is the side that I am on, where we collect the assessment, that per bale assessment that all U.S. cotton growers pay into the program. We administer the program, provide oversight, and then we get to communicate back to our stakeholders what the program is doing on their behalf. Cotton Incorporated is the entity that actually carries out the research and marketing. So research in mills, on farms, promote cotton to consumers, to industry, really creating that demand and profitability. Since we are a research and promotion program, we do have oversight by the USDA. So that's a nice trio of organizations that represent you guys as cotton growers with the research and promotion program. So the Cotton Board has a board of directors as well as Cotton Incorporated. This year, we are lucky to be under the chairmanship of Matt Farmer, a producer in La Mesa, Texas, on the Cotton Board. The Cotton Board of Directors is a little unique. We have importers and producers on our board, so a nice mix, and you see that represented in our board of directors here as well. So we have 2 importers that are serving on the executive committee, as well as 3 producers. So those importers represent brands and retailers, mills and manufacturers, whatever kind of importer organization, and companies that represent them as well. Our annual meeting is held in August of every year. So Matt Farmer was elected chairman in August of 2025, and his chairmanship will conclude in August of 2026. So we're really looking forward to Matt and his service this year. But you guys are well represented by producers and importers that are there at the Research and Promotion Program on your behalf. One of the shining star programs that we have at the Cotton Board, I think I mentioned this every single time I'm on the call, is our Cotton Incorporated producer tours. These are the best way for us to showcase what the research and promotion program is doing on your behalf. So we love bringing growers and industry partners to North Carolina to tour the facility. You get to meet growers and partners from all across the cotton belt. We get a tour commercial spinning mill while we're in North Carolina, and the Cotton Board covers your travel expenses to attend these tours. So we have 3 slated for 2026 and 3 slated for 2027. I'd be happy to talk with anybody interested on these tours, a little bit more details about what we do, about travel, etc. But I'd really encourage you, if you've not been, or if somebody in your office or operation has not been, let's visit. It's really a great way for you to understand the work being done. You get to meet the staff there at Cotton Incorporated, and get to hear directly from them on the projects that they have taking place. Another really kind of shining star program that we have at the Cotton Board is our Cotton and Coffee Zoom series. This was actually a program born out of the pandemic, but we are in season 7, and we just hosted our January session yesterday. It was a really interesting session from Lynn Kilroy about cottonseed marketing, but we host these on the 3rd Tuesday of every month, where we get to highlight a new department at Cotton Incorporated, maybe a new project, maybe a department you've not heard from, maybe some new initiatives for the quarter or for the year. So coming up in February, we're going to hear from Yvonne Johnson, who's in the product development and implementation department, on some new innovative fabrics that really are geared towards the apparel and home industry, and how we can have these innovative fabrics and technologies to get more cotton in the apparel and home industry segment. So if you've not joined us for a Cotton and Coffee, shoot me a text or shoot me an email. I'll get you registered, or you can find our registration form on our website here on the screen. but we'd love to have you join us. It's a quick 20-30 minute Zoom session. And then we have question and answer at the end. We do record all of these and archive them to our YouTube channel if you can't join us in person. But it's a really great way, again, to hear of the work that's being done on your behalf at Cotton Incorporated. I'm going to share, like I said, a brief update on 2 different departments at Cotton Incorporated, but also kind of an overall update. Like I said, the Cotton Board annual meeting is in August of every year. And at that meeting, we also vote on and approve Cotton Incorporated's budget and key strategy areas for the next year. So I've not presented to you guys on this call since we had our annual meeting in August of 2025. So a little bit of new information that I want to provide for you at this time. So the budget that we are going to be operating on in 2026 at Cotton Incorporated is $85.1 million. This is a decrease from how we've been operating in 2025, but I think it is still really exciting to show that we can still fund the program at such a high financial level. We have great financial teams at Cotton Incorporated and Cotton Board that have been able to utilize financial reserves and some really strategic budgeting decisions while we've had some challenging times on the farm. Our importer assessments kind of help carry the program and really are a true partner in the program that can allow us to continue operating at such a high level, even in a challenging time such as we're having now. So that $85.1 million is what we'll be operating here in 2026. Within that meeting, within that budget and framework, 4 key program focus areas evolved that we'll be operating on under 2026. And these are really the main pillars that you'll see and all of the work that is being done this year. If you remember last year, I talked about the program's gone under a third-party evaluation. From that evaluation spurred a little bit of the work that they're going to focus on this year. But first, there's going to be really a new marketing focus, shifting away from sole consumer marketing into more of supply chain marketing, where the decisions about fiber content are made at brands and retailers. So this shift is going to include marketing to mills, manufacturers, and brands and retailers. We'll also really place a greater emphasis on cotton's natural advantages, reinforcing its high quality, its sustainable nature, and its compliance and how it is benefits to the value supply chain. We're also really focused on targeted partnerships. Instead of trying to advertise and do partnerships everywhere, the program is going to focus on those targeted partnerships that are going to drive innovation and influence real-time purchasing decisions. And finally, we'll have a strong emphasis on measuring impact. Key performance indicators and KPIs will help evaluate program effectiveness, and we'll be able to utilize a fail-fast approach. When projects aren't delivering results, they can be adjusted or discontinued, so funding allocations can be redirected to more higher impact efforts. So really the goal with this is to ensure that every dollar we're using is working as hard as possible, and also offering the program the flexibility to shift that funding when something isn't quite working as they were hoping so. So I mentioned Cotton Incorporated also has a board of directors. Their board is comprised of all cotton producers from all the 17 cotton producing states. Their annual meeting is held every December, and their officers serve a 2-year term. So Marvin Beyer was elected as chairman of Cotton Incorporated. He is right in the middle of his term, and hopefully you guys are thrilled to see that he is representing you in South Texas. Marvin is a producer from Taft, Texas. He's been a longtime standing board member, an executive committee member, and he's been really a true partner and a great leader for Cotton Incorporated. We're excited for him to finish out his tenure as chairman this year, and then he'll of course stay on the executive committee as past chairman. But we're really excited to be under Marvin's leadership at Cotton Incorporated, and hopefully that's exciting for you guys as well. So the first department I'm going to provide a brief update on is the marketing department. Now a single department, as I mentioned, we've really shifted into more of an approach of marketing to the supply chain versus sole marketing into the consumer space. So in this marketing department, Cotton Incorporated is still on the search for hiring their chief marketing officer. We are hopeful to have this person in place in the Q1 of 2026. Their real effort is going to be on targeting that supply chain, mills, manufacturers, brands, and retailers, where those purchasing decisions are made. And then also really working to grow and preserve the market share of cotton. So the pillars of the supply chain marketing strategy, really shifting those efforts into the midstream is what we're calling it, the midstream marketing, that value chain, emphasis on mills and manufacturers, really positioning cotton's natural advantages, particularly in the compliance space. Its sustainability requirements are no longer optional for a lot of these global supply chains and global companies. While cotton's natural biodegradability and microplastic-free attributes are extremely important, and are really, really relevant in a lot of these regulatory conversations that Cotton Incorporated is having with mills and manufacturers. And they really want to make sure that they know that U.S. cotton meets all of these standards, and really making sure that this is a natural choice for them. They also will focus on preserving and growing market share and high opportunity categories. Places where you think that cotton has had and continues to have strong potential: denim, casual apparel, home textiles like sheets and towels, and also the blend market. So the goal is really to defend cotton's share in these areas where it performs well, but then regain ground where synthetics have gained a little bit more ground. So we're excited to see that in the marketing. And then also innovate in the farm, fiber, and products. So a lot of times I think we associate innovation kind of stopping on the farm, but it really carries through fiber quality, processing efficiency, and end product performance. Cotton Incorporated's team is going to work on fiber length, strength, and performance, to provide that consistent quality that mills and manufacturers demand and expect from U.S. cotton. So really working on this global supply chain, and really encouraging the confidence in U.S. cotton and the quality, consistency, and the performance. So I've mentioned a few of these key initiatives sort of already, but in this marketing department throughout 2026, we're going to really see, a great example of positioning cotton as a natural plant-based solution to microplastics and microfiber pollution. There is a lot of research that has been done historically through Cotton Incorporated and continues to be done, on that messaging of biodegradability, education, and awareness of the threat of microplastics and where those come from, and how cotton has a great seat at the table as a solution to this microplastic pollution. There also is going to be a lot of work in approaching promoting the seal of cotton. As cotton moves through the supply chain, the seal of cotton mark serves as a real trusted signal of quality. Brands and retailers and consumers alike associate the seal of cotton with quality and with cotton content, so they can trust that what they're purchasing has that fiber of choice. So we're really going to make sure that this seal is visible, it's in targeted partnerships, it's on hang tags so consumers can see it. We're also going to have a focus on active and athleisure. So these are categories where synthetic fibers have gained a lot of ground. Cotton Incorporated works directly with those supply chain partners on fabric innovation, creating performance blends, and trend forecasting, to try to make, some cotton rich or cotton blend fabrics compete in these comfort, athleisure, and active products. So think leggings, Lululemon, Under Armour, working with brands and retailers like this of how they can get more cotton in their blends, in their products, and then promoting that to consumers. And finally, this marketing approach is really going to target mills as marketing partners. So Cotton Incorporated is going to equip mills with messaging, fabric assets, and co-marketing tools so they can help tell the beautiful story of cotton themselves, the biodegradability, the sustainability, and why cotton should be the natural choice, which really allows more advocates for cotton earlier in the decision-making process, where those fabric blends are really being created. So it's exciting to have this viewpoint as using those mills as our marketing partners moving forward. A few highlights that I'll mention as we go through. In 2025, we had 29 new Seal of Cotton licensees. So these are companies that have adopted using the Seal of Cotton on their products. There is quite a bit of, they have to meet a certain requirement of their cotton blends. Cotton Incorporated kind of manages this. We also saw 13.5 million products in stores that carry the seal of cotton throughout the last couple of years, and 38 million cotton products on the store shelf that were influenced by technology and marketing that came from Cotton Incorporated. So we've had a really strong presence in the marketing segment in 2025, and we're excited to continue that through 2026 and through the new focus that we have. So while I mentioned we're not going to be solely focusing on consumer marketing, it is not going to be going away. We still will do some retail targeted partnerships. We're still going to be amplifying that microplastic research and messaging, as well as utilizing social media influencers, online influencers, to really help share that message of why cotton should be your preferred choice, especially in the microplastic and microfiber pollution space. The consumer marketing department will also be launching some refreshed jingles of the fabric of our lives. It's a near and dear tune to all of our hearts. And so you should look for that in some streaming commercials and some streaming advertising this year. And there also will be a CNBC mini documentary coming in 2026. This has been a really exciting kind of new launch that we're excited to see in February. This documentary is really going to help us share Cotton's story with a broader audience through CNBC, and it's going to show how cotton offers sustainable, compliant alternatives to industries under pressure. So the narrative will reveal cotton's journey from soil, so from the farm to style, to those shirts, to those clothes, to those home textiles, and it'll really encourage viewers to recognize their power of choice, checking the label, making purchasing decisions based on the fiber that they should prefer. It'll address the concerns around microplastics, other complex issues, and backing it by research and science. Cotton Incorporated will plan to amplify this documentary when it launches, so to their supply chain, to their mills, to their manufacturers, and use their consumer influencers to really talk about this documentary, this film, and cotton's natural advantages. So stay tuned. We're really excited to have this come to us. The last thing in our cotton marketing department I want to share, our Blue Jeans Go Green program, which has been the capstone kind of sustainability effort, if you will. It's where denim can be recycled into another product, insulation. It really provides that end of life cycle opportunity for cotton products. But Blue Jeans Go Green is celebrating its 20th anniversary in 2026. So there will be a lot of marketing, newsletters, etc., that come out about this through 2026. So we still encourage you to partner with the dealerships, the brands, the retailers that you've done now recycling your denim, and really be on the lookout for our Blue Jeans Go Green messaging throughout this year. I have just a few timely updates that I want to provide on our ag research department. I know I'm kind of coming up on the end of my time, so I will be quick. But as you know, in our ag and environmental research department at Cotton Incorporated, this might be kind of the closest department that producers associate from their research and promotion program. Cotton Incorporated funds and invests money in over 400 research projects every year. A lot of times these research projects are with our research cooperators. Maybe they're in your county, in your region. Think Texas A&M AgriLife, the universities, scientists, that they're going to partner with these experts in the field to provide belt-wide level and focus research, as well as local specific research to you in Texas and to you in South Texas. So this department really, it really has a robust amount of resources, amount of research and expertise that are there at their hands. So the kind of, key focus areas for ag and environmental research in 2026 is really to kind of help enhanced resiliency on the farm. So use the products that you have efficiently, and how we can really handle those adverse weather and adverse conditions there on the farm, whether it's through irrigation, extreme weather, nutrient use efficiency, planting seed quality, etc. We'll really focus on pest management. Those pests include insects, weeds, pathogens, and any type of regulatory compliance that's challenging or a little bit of a limitation for you producers on the farm. There also, of course, will be an emphasis in precision farming. What new precision technologies are out there, how automation, sensors, AI, and data can help you guys on the farm, whether it's just through some more research, whether it's through trying these applications and how they they apply to you. We are very invested in supporting research that showcases co-product utilization, whether it's yield and quality mapping, novel pest management, breeding advances, and then that co-product utilization. So, kind of what we're looking at, afterwards is cotton seed, what its oil content, how it can be used, some novel uses for cotton seed, oil, some storage and handling, kind of that aftermarket when the cotton leaves your farm, what happens to it after that. The Cotton Incorporated has a cotton cultivated site, which is our ag research facing site for you guys on the farm. This has been really kind of a showcase site where you can search research projects, search slideshows, search presentations to find research that has been created in timely, practical nuggets of information that you can get as a grower. The new cotton cultivated site, it got revamped in 2025. We're excited to launch a cotton cultivated newsletter starting in 2026. And the topics are going to be scheduled in that newsletter kind of around the production calendar. So things like planting decisions, nutrient management, variety selection, emerging challenges, things to kind of walk you through that planting, growing, and harvest season. Cotton Cultivated has really worked in 2025 to make sure that their information is more accessible, easier to find, usable, and relevant to you guys as farmers. So we're really excited about that. You can kind of see here listed out some of the topics that you can expect to see in January and in February in the newsletter. If you'd like to sign up for this, please shoot me a message. I can give you the sign up sheet, or you can just search the Cotton Cultivated newsletter and you'll find the sign up link there on web. Our Ag and Environmental Research Directors have also been highlighted in several cotton specialists corner podcasts this year. Some of the latest episodes they've done and participated in some crop updates by region, talking about the cotton jacid, the new emerging pest that we're all concerned about. But we're really excited for you to listen. Wherever you listen to podcasts, look for the Cotton Specialist Corner and you'll hear a bunch of guest speakers, a bunch of timely information and topics from our Ag and Environmental Research team. This has been a really good tool for cotton growers to be able to use and gain more information, learn some nuggets, and then also kind of get themselves familiar with some experts in the field. So that was a brief, really fast update on some work that Cotton Incorporated is doing. And again, on a really small nugget from our marketing and ag research team that we have at Cotton Incorporated. Hopefully it was interesting to you guys and useful. I'd be happy to answer any questions and visit with anybody that is interested in any of the programs we have, Cotton Incorporated, tours, our Cotton and Coffee, or connecting you with any of the staff we have at the Ag and Environmental Research team. So thank you so much for the opportunity to present.
Fantastic. Christy, thank you so much. I know we gave you kind of a tight window to present a lot of really great information. We appreciate what you guys are doing, what you guys do to help generate market interest and market opportunity for our producers, because without a market, the production side of it begins to struggle pretty substantially. So thank you guys for hanging in. Dr. Anderson, appreciate it. I know you're having to do it from your phone and your computer, so thank you for making that work this morning. Guys, we will see you again next month, it sounds like. Christy, thanks again for joining us. We'll get this posted and share the link and make sure we communicate any questions back your way.
Thanks.
Thank you very much.
Y'all stay warm. Good luck with this weekend's weather.
Y'all too. Thank you.
Bye.
Bye-bye.